All right, well, I am back again trying to live stream here, but I'm looking at my screen, full screen. So I'm trying to get used to this live stream so I could do it a little bit more. But I don't see the questions and I have feedback. So let me see if I could fix this. Okay, so I took care of that, but I still can't see the chat window here. So what I'm going to do, guys, is I'm going to go through this video because I wanted to show you some trading opportunities or trade setups with the cryptocurrency pair. So I'm going to go through this and let this video get posted on YouTube, and then I'll still be in the learning process of doing a live stream and being able to let you guys chat to me while I do this. All right, so I'm starting out here with the IOTA USD. And you could see here this market was in a sideways range pretty much, and we have bottom support levels and pretty much bouncing off of this Kijinsen level also. The current candle, which has roughly 2 hours, I guess, 2 hours and 6 minutes before it closes. If it closes like this, you could see this is a rejection of the previous support level with the Kijinsen in your cloud. So what I'd like to do basically is put an entry above this level, a little bit above that level, with my stop loss a little lower than that. And then we're going to at least shoot for this target up here because this was in a range, and if it's going to go higher, it'll probably go back up to the range level. So that's what we're looking at here. You got a little rejection here bouncing off of the Kijinsen. Flat Kijinsen, pretty much flat Tinkinson, no angulation on neither of these. Your cloud is flat, not a good sign for Ichimoku. I'm using the default settings. So with everything flat like this is telling me there's no momentum in the market. But again, this is an indicator and it's slower than the market. Okay, so you have to look at the market itself. And so once it starts moving, all this stuff takes a while to start moving with the market. All right, so we're just looking at the pure price action here just to see what the market is doing. So we like this rejection candles. These rejection candles are what we're looking to trade, the bounce off of the levels and then the move to the next level. So this is where we're looking at right now. So not a lot there, just a possibility to put an entry at this point and, stay below the wick of the candle pretty much, and then try to shoot up for this target here. Now I would probably move it down at first to maybe this 5.324, and then maybe you can move it up to see if price can continue and then move up to this level. And then just watch the price action to see if you can continue to make it through those levels. Now, if this market doesn't gain any momentum, we're just going to be flattened here and we'll just stay in this area. You won't get much of an opportunity. But if the market doesn't, go lower than your level that you're looking at anticipating, well, then you can let it just stay in there as long as it doesn't take you out, and then you can move higher if it moves higher. But there's not a lot of momentum in it, but there's good opportunity based off of what we see with the price action at this time. All right, so I'm going to move on to my next opportunity, which is going to be the RXP. I mean the XRP, sorry, which is your Ripple. All right, so the Ripple dollar, it's given us a good opportunity. Let me check something real quick. So I don't see any divergence, which is okay. I guess that's all right. Just have to base everything off of what we see with the candles here and the support and resistance level. So we're looking at the market. This is your normal default settings again. And you could see the market following our Tinkinson level, and then we break inside the TK zone. This is your TK zone. Once you're inside the TK zone, we're looking to see if the market can bounce off of the bottom of the zone and move higher. So we're looking again, another rejection candle, and we're looking for the bounce off of this Kijinsen level. All right. Now this is a flat Kijinsen, but you're flat because you pulled back. You had a pullback. You had a little bit of angulation here as the market was breaking these highs. But recently we haven't broken a high and we haven't broken the low of the past 26 periods. So you're seeing this flatness here. So with that, we have a nice rejection candle here. All right, so there's some buying pressure in this area, quite possibly. So I'd like to put an entry above this level, a little bit above the wick. Stop loss should be below that level, below the wick, and see if the market can continue higher off of a bounce here. All right, so that's what we're looking at, a bounce off of the Kijinsen level. Now, I like to look at other levels and take other things in consideration, and I really trade fractals more than anything. All right, I trade fractals more than Ichimoku, but I trade Ichimoku basically for a lot of bias and support and resistance levels. But the fractals are going to tell me the market. All right, so if you understand the fractals, you can really get in some really good trades. If you don't understand the fractals, then you really don't understand the market structure. If you don't understand the market structure, you're going to be trading the market in the wrong direction. All right. So that's a quick look at the Ripple. I think I posted this the other day, but it's still got an opportunity. I think if you just be patient here, put an entry above this level and see if the market moves higher. If it doesn't trigger you, then it just keeps going lower. Well, then there's nothing we got there. All right. So I'm going to go to our next pair. Hopefully everything is working good. I'm looking, all I'm seeing is my screen here. We had a breakout here on this EOS dollar. The market was in this sideways range because it pretty much was in the body of this big rejection candle that changed everything with the market when this happened. All right, so everything pretty much changed. And I like to give the market time to get back into its normal swing of things after you have a big, long candle like this. I don't care what what assets I'm trading or what kind of market I'm trading. When I get something like this, that is really huge. That is not normal. And it also took the market out of the structure that we were following. So it's hard to trade the rest of this at this point in here because you're not sure what the market's attempting to do. Is it attempting to find support or is it attempting to go lower? But now we start to see what it's doing. That's why I wait a while after I see something like this. And now you could start to see what the market is doing. Now it looks like the market is finding its range levels. All right. Because we attempted to move higher here and probably a bunch of traders jumped in on here. And that's what I was going to show you, the possibility of jumping in there. But the thing that I don't do, I don't trade range breakouts ever. Okay, I barely often trade a range breakout, and that's basically what this is. I want to see the market break the level. A lot of traders feel when the market breaks the level, they missed the opportunity. The market's coming back to a level, you can get back, you can get an opportunity to get into the trade. New traders especially think that once you see this run, you don't get another chance at it. All right, because they think it's gone and done with. No, the market moves in corrections. It moves in a wave to the upside, then it corrects itself, and wave to the upside, correct itself, and you'll constantly see that. So when it breaks this level, I don't get into this opportunity. Now, if you want to take this opportunity with the close above this level, that's a breakout of the range. To me, where are you going to place your stop loss? I mean, because the market has the ability to come all the way back down to the support level here. That's why I don't really like trading these levels, because I don't have a defined stop loss level. But if the market, suppose the market does this for me, right? If the market does this, what if I wait, I don't take this trade, the market breaks out, and then it comes back to my level, and then I could get the trade there. Safer, because now I have some support behind me. Here, if you go long here, and this is attempting to break, but then it falls below, then you don't have any support until down this area again. So nothing to help you to hold you up. But here you have something that can probably possibly hinder your trade. So it gives you a little more probability. All right, so that's why I don't take these breakouts, because you could get the opportunity back. All right, so that's looking at the EOS dollar, and I'm going to look at one more pair. I did post this on YouTube, I believe. It's crazy that I can't tell if people are watching me or not. So I feel like some crazy man just sitting here talking to myself. I don't see anything except my screens. So you can imagine I'm sitting here looking at my screens and I'm talking to myself, and I'm like, am I crazy or what? You know what I'm saying? But no, just for real, let's get to the next pair. Let me stop you guys from thinking I'm crazy. If my wife comes in here, she'll think I'm crazy because she'll see me talking to a screen. All right. But here we go. This was the opportunity I posted a couple places. I posted this on, I believe I posted this on YouTube, and I posted this on TradingView. We're getting an opportunity maybe. So I didn't want people to rush with this. All right. So now we could lower this level, but we're going to keep our entry where it is. All right. So this is the sentiment dollar. And what we're looking at on this daily time frame is the market staying. First of all, guys, look at the Tinkinson and Kijinsen level. The market likes to follow that level. So as we follow that level, we get trading opportunities. So I told you about taking trades at this level based off of price action. So the market came back at this level right here. You could see we're bouncing pretty much on that Tinkinson level with this rejection candle. So I want to move the whole stop loss area down to that level. All right. So now I want to see if this level is going to hold, if this is going to hold, because look at currently we're breaking these lows, these previous lows. So we don't want to break a low. We want to see a break above this high. But what I want to see now is a break above this high and a close above, and that's where I'll take my trade. Now, this candle has 2 hours to go. I'll see what this candle develops as, and then maybe we would lower our entry. But currently I'm going to enter at this level. All right. And this level is 7.48, and then you can see where we got the stop loss set up at. And I'm shooting for this target where we are. If the market bounces off of this level, my target is going to be 10.24822. All right. And the way I found that was Ichimoku observation levels. I've shown it in a lot of other videos. It's more thinking of the advanced Ichimoku, but basically it's a 1-to-1 ratio, really, which is also other than Ichimoku. It's just, you know, an AB equals CD move. And that's what you're looking at pretty much. That's what we're looking for the market to do. So that's my overall target if we get this trade opportunity here. Well, we don't want to see the market pause here and not do anything. If we close lower, then I think basically the way you can look at this, even if we close inside our TK zone, all right, so I posted this yesterday and we were here, and I wanted to still trade above this level. I haven't changed my entry level. But if we fall back into the TK zone, which is your Tinkinson, Kijinsen level here, and we find support at the Kijinsen, or we don't go lower than the Kijinsen, then we could trade above the Tinkinson level with support at the Kijinsen. So the trade could change. So you have to monitor your entry to see what that's why I look at the candle daily on a daily basis, just to see where we are. Okay, because I don't have to rush to this because it hasn't done anything. I already got a level set. If I'm going to have an entry at that point, you want to go there, let the market move up to that point, take you in, and boom, there you're good. If the market goes lower, comes down to this point, you're going to let the market trigger you back in again at your Tinkinson level because you're inside your TK zone. And then the market breaks out of the zone. All right. So that's pretty much it. I'm still working with this live stream thing, so I want to figure it out and see if I'm doing the right things and how I could make sure if I get an opportunity to chat with people. But I was going to just do this a regular video, but I wanted to do it live because I want to see what we got going on with the live stream so I can do that sometime. All right. So hopefully this was good. Hopefully you guys liked it. And if not, just tell me you don't like it. Okay. And we'll see what we could do. But probably nothing. All right, guys, I'm done with this. Until next time, have a great one. God bless. So long.